morning and welcome to the VSA Morning Miner. It's Thursday, the 27th of February, probably the last morning miner we will do before heading out to PDAC. We might do a couple of specials whilst we're out there. A few bits of news this morning, Paul. Let's start with Ecora, the royalty company. They've announced a deal.
Yes, that's right. They've made a major investment for a copper stream. This from private company Mohico Resources on its Mimbula uh, copper deposit down there in Zambia. Specifically, $50 million going in by Ecora for a life of mine copper stream of 11 years, where the current life of mine is 11 years anyway. And ecora has triggered a $30 million revolving credit facility in order to participate in this, such that it's brought its total borrowing facility to $180 million, with about 55 million undrawn. So, initial 7 to 8 years of streams for ecora to drive earnings growth, and they expect some debt reduction to take place during the next 12 to 24 months. So definitely ecora getting into the copper space in a more substantial way with this deal.
Yeah, they think that after this deal, their group exposure to copper would be about 45%. Obviously, they've been shifting for the last couple of years away from their coal exposure to battery and non-fossil fuel metals. And I guess the portfolio, with the big change, the market struggled to revalue that. So this is a sort of big step in terms of growth for that. Obviously, this is a stream, not a royalty, so slightly different structure, and it drops down to 1% as production increases over 30,000 tonnes in different increments. And after 9.15 thousand tonnes of delivered metal to core, which, as you say, should take 7 or 8 years, that drops down to 1%, which is more like just a simple royalty. But looking at that, 9,000 tonnes over, if you were buying that today, that would cost you $90 million. So whether you think it's a good deal really depends on what your view on the copper price is and what discount rate you want to use for Zambia. Good to see, though, another deal happening in Africa. We highlighted after Indaba, we thought that specialist finance and strategics were starting to get back in. There's obviously still a bit of an institutional gap in funding, but investors are starting to look again at Africa quite seriously.
Yes, and we hope it continues for some time now.
What else have we got, Paul?
Real quickly to mention AIM-quoted Zambia quicklime outfit Firering Strategic. They have announced that their first kiln has produced the first quicklime at their Limeco project. And that is the first kiln of what they intend to have a total of 8 kilns, which would be producing something between 80 and 100 tons of quicklime per day each. Now, quicklime is a crucial pH buffer in copper production, and lime and limestone is a notable rock and material which is absent in the geology of Zambia. So, most of the quicklime for the copper industry for processing has to be imported. So, Firering having an operation within Zambia should give them a tremendously good advantage if they know how to manage the ramp up of this properly. So they've got the good stockpile in front of them, in front of this kiln, 50,000 tons to begin processing. So we wish them a lot of luck. And at just 8 million market cap, it's one to closely watch, I think.
Yeah, obviously, there's not too much listed exposure to reagents like lime and sulfuric acid, but they play a big role in operating costs, and shortages can have a big impact on mine inflation.
and well as short-term trading volatility in metal as well.
Yeah, yeah. So it's quite an interesting way of getting different exposure to the different drivers within the industry. Paul, we started the week off talking about gold earnings results and outperformance because of the Q4 rally in gold prices. We're now nearly at $3,000 an ounce, but there's also been a statement out from Harmony today.
That's right. Harmony, being a JSE listed company, is obligated that if they foresee that there will be at least a 20% change in earnings from the prior reported period, that they must pre-tip the market as to what their expectation is. And they've released today that they expect earnings and revenues to be at least 20% better than the prior period when they report their 6-month results. Now, they're going to report formally those results Tuesday of next week, but they're expecting, because of the US dollar terms average gold price increase of 28% since the last reporting period, that they will have at least a 20% move in their earnings and financial statement.
Very good. Is there anything else? We've gone on for quite a bit, so
That's enough for now, I think.
very good. All right, Paul. We won't be back tomorrow. Have a good flight to Toronto,
And you
and hopefully we'll
likewise.
get a special out for next week. Thanks.
Very good.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.